Today I'm going to show you the best Forex strategy, and I think it might be a bit of a surprise. And then 3 important tips to winning at Forex trading. Be sure to watch it all. Hi, this is Tim from TradingStrategyGuides.com. I'm still sounding a little raspy here, so apologies for my voice. Hopefully this will clear up in a few days. Today, I'm going to show you what I believe is the best Forex strategy. It'll probably surprise you. And then 3 important tips that will help you to win at Forex trading. Then I've got something really important I want to tell you. After that, we're going to take a look at a new setup on the Euro-Swissy Forex pair. But first, updates on our open trade. Yes, currently I've only got 1 open trade. And then later on the trading Maxim for the day. Let's go for it. Remember to click the subscribe button and hit that bell so you don't miss learning these winning Forex tips. Okay, on to the open trade. As anticipated, we got a close below the range on the Litecoin-Bitcoin cross yesterday. We got sufficient volume that I sold a full-size position at 60.62 with a stop loss of 64.30 and a first target of 58.20. If we get a candle close back inside the range, I'll close this one for a loss. We got our profit on this New Zealand Swissy, but I want to continue to watch it to see what our results would have been if I had used the parabolic SAR for following the stops. As of now, we would still have our stop at break even, and you can see that it's pushing up pretty hard today. Okay, I'll show you the Euro-Swissy setup shortly, but first I'm going to show you this great Forex strategy. Well, I told you this might be a bit of a surprise, didn't I? I'm about to say something that's always very controversial when I say it, and if you disagree with me, don't hesitate to give me your opinions in the comments. Just be constructive about it, okay? Don't just tell me I'm ugly and my mom addresses me funny. I already know that. Tell me why you disagree and what you would do or say differently. Okay, here's the statement. Your trade entry is not the most important part of your trading success. Let me say that again. Your trade entry is not the most important part of your trading success. With consistency, proper trade management, and discipline, you can almost have a random trade entry and still be successful. Of course, there are caveats, but your entry timing and direction are far less important than most trading students perceive they are. So my best trade strategy is my trade management strategy, and I use it for just about everything. And it consists of these rules. Number 1, stop loss is 1.5 times the average true range, or ATR, on the entry candle. Why do I use the ATR? Well, because it adjusts itself automatically for the time frame or market on which I'm taking my entry signals. For example, if I'm trading the Great British Pound New Zealand Dollar Forex pair on the daily time frame, the ATR might be 250 pips. But the ATR for the Euro US dollar on the 1-hour time frame might only be 10 pips. Rule number 2. The first target is 1 times the ATR on the entry candle. Yes, initially my risk is greater than my reward, but functionally my per-trade losses are typically smaller than my per-trade wins because of the next rule. Rule number 3, close the trade immediately if the entry conditions change. If the initial plan for your trade goes wacko before you hit your first target, close the trade. There's no reason to hold for a whole stop loss when you can take 1/4 or 1/3 of your loss instead. I always backtest to be sure this is true of my strats. Rule number 4, take half off of your trade for profit when the first target is hit. You could just move your stop loss to break even on your whole position if you want to, and if you've got a good entry strategy, you may make more profit overall doing that. That's the case on most of my entry strats. But I don't do it because it always ends up whipping my account around with bigger drawdowns. I just like to know that I've got some profit early on. Rule number 5, move the stop to break even on the second half when the first target is hit. This ensures that your trade is free from this point on. And lastly, rule number 6, follow your exit strategy for the second half. This could be any of several methods that I've shown you over the last few weeks, like Heikin-Ashi candles or parabolic SAR or something else. Experiment liberally. With all that having been said, a well-tested entry strategy is far better than a totally random entry strategy. But the statement brings into focus the important parts of trading: consistency and discipline. And that brings me to my 3 tips. Tip number 1, define your trading rules. Tip number 2, backtest your trading rules. And tip number 3, follow your trading rules. If you have rules, then follow them. If you determine a rule needs to be changed, then take the time to test and compare the old rule to the new rule, and then make a legitimate change in your rule set. Don't just randomly change a rule just because one time you took a big loss or a big win or whatever. Remember, I told you earlier that I had something really important to tell you. You know we want this to be the best trading channel on the internet. The only way we can do that is to see traders' lives transform through successful trading. How many of you believe with me that you can be a successful trader? If you believe you can be a successful trader, like this video and tell me what you believe your success will look like. Take a second to comment in the section below what you're trying to accomplish with your trading. Let's look at the Euro-Swiss trade setup. The Euro-Swiss has got a nice, well-confirmed bear flag. A bear flag starts with a downtrend, then an upward moving parallel price channel. I also like confirmation of these patterns with declining volume and volatility. We anticipate a bear flag to break to the downside. And here's the trade plan on this bear flag. We will simply sell a daily candle close below the bear flag. On the breaking candle, to enter a full-size position, I want to see this volume bar reach up to or beyond the volume average. If it doesn't quite reach the average, but does reach at least 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing the volume here by the average volume here. You should get at least 0.75. If you don't get that, don't enter the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. That means on the breaking candle over here, look for the ATR. Multiply it by 1.5 to determine the stop loss, and place the stop loss order that far above the entry price. Place your first take profit 1 ATR below the entry price. If after entering the trade we get a candle that closes back inside the bear flag, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout below this pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now, these 2 rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using 2 positions. The first position has a stop loss and a take profit at the appropriate prices. That position will close automatically when the first target is hit. The second position will have a stop loss and no take profit directly associated with it, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the new setup on the Euro-Swissy Forex pair. Once again, I'm not trying to tell you what to do. I'm just telling you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. And if you've got a trade management plan that works better for you, by all means use it. Trading is a very personal thing, and things that work for me may not work for you. You have to understand your own mind to find the best strategies for your own trading. And of course, as you know, psychology is, in my opinion, the most important part of trading. And the trading maxims are my way of helping to handle my personal psychology. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims. Things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 24. A smart person learns from his mistakes. A wise person learns from other people's mistakes. You know, I've made many mistakes in my trading and my life. I freely share them with my friends because I want to be a shining example of what not to do. I know sometimes we have to make our own mistakes to really get it, but it's so much easier to learn from someone else's mistakes. I wish I understood that when I was 20 years old. I spent much of my life relearning things that my dad actually tried to teach me as a teen. Would that I had paid better attention back then. Remember our Euro-Swiss trade plan here. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And please don't miss any of my trading picks. Sign up for my trading picks email list so you're sure not to miss them. I'll be sending out 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll see them first. And the best thing is it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or two on each one and maybe some extra Q&A or training. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And please don't forget to comment below on what being a successful trader looks like to you and what you're trying to accomplish. That's the way we make this the best trading channel on the internet, by seeing lives transform through trading success. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great weekend, and I'll see you next week.